Proceedings are now resumed. You may be seated. Before we took the suspension, we were debating the private member's motion number 16. Does any other member wish to speak to the motion? Does any other member wish to speak? Does any other member wish to speak? Then call on the mover of the motion to
The seconder was speaking.
call on the leader of the opposition.
Thank you. Thank you, Madam Speaker. If I could find the lectern. Madam Speaker, thank you for the opportunity to speak to the motion that is before the House. I apologise for the lateness of my standing, but I had hoped or sort of anticipated that the seconder would speak, of the motion would speak before myself or anyone else did. Be that as it may, Madam Speaker, I'm happy to move forward and address the motion. Madam Speaker, interestingly, but shortly after this motion was brought to Parliament or tabled, the Premier issued a press release regarding his approach to the banking community, requiring their assistance with interest rates. In the press release, the Premier noted that he had made several requests to local banks. He asked them to allow it, I think, at least 60 days between the time the interest rates are raised in the USA and when they are raised here. Also, he asked the bank to give customers a 60-day notice when increasing banking fees, and that banks can reconsider the formula for calculating the CI prime and use a lower rate than the US prime rate. Now, on the surface, Madam Speaker, these things seem like reasonable requests to start a conversation. However, Premier did not publish the bank's response to his requests. And I do ask him and urge him to be fully transparent. Let us also see what the bank's response to him was. We do have his letter. It will be interesting to see what they had to say. Be good to know, Madam Speaker, what they had to say in response and whether they showed a willingness to work towards a solution. Because I think that's really important in this whole discussion that we're having here, is that there needs to be a willingness, in my mind, for both parties to come together to have a discussion. And that's the way I think we in the opposition looked at this motion, that formed a basis which I would think could be a starting point for discussions with the banks. I do believe, and we do believe, that banks should certainly provide adequate notice before increasing fees, and 60 days sounds like a reasonable period. But that may not be when you get into discussions with them. So there needs to be a discussion. Well, we should, I believe, consider making such a timely notification mandatory, regardless of what happens with this motion tonight on interest rates. I was pleased to hear from the Premier when he told us that the work of the Law Reform Commission on the mortgage, the work they are doing on the mortgage regime. I do believe, as he suggested, that this is somewhere in which we could incorporate some of the things that we think might be reasonable and might be able to be accomplished. But again, I think the importance for us is there needs to be a face-to-face conversation. A couple letters back and forth, to me, just doesn't cut it. And that's what I would like to see. I have listened to the mover of the motion, and I believe that he is seeking to do what he believes is right. Just as I mentioned regarding Premier's request to the banks, the mover's resolve clauses can certainly be the start of a conversation. Whether we can reasonably expect banks to lower interest rates immediately or to not increase interest rates for 24 months requires a discussion and understanding of what is possible.
Say that again. And come over there and sit by me.
I won't sit by you, sir, but I'm happy to repeat it. Whether we can reasonably expect banks to lower interest rates immediately or not to increase rates for 24 months requires a discussion and an understanding of what is possible. Premier said it right. It is a complex issue because we have to understand in this country, and particularly in this parliament, when we talk about the Cayman dollar, US dollar, everything we do in this country, our currency, is tied 100% to the US dollar. And I'm going to say it, right? Our country's currency is backed 100% by US dollar denominated sovereign debt. And so it is inextricably linked. You cannot decouple it without causing massive disruption. SEMA does not issue CI dollar denominated bonds to back the currency. It's all US backed. It's the greenback. It's backed by the full faith and credit of the United States government. How are you going to decouple it? 80% of our trade, 90% of our trade is with North America. But that doesn't mean we can't have a discussion, because I do believe, honestly, things are possible. We just need to get calm heads together to talk about it and see where we can get to. After all, the banks are businesses with shareholders and depositors whose interests must also be considered and protected. There are a lot of moving parts, a lot of different competing interests, and it takes effort and time to really find a common ground. And what is essential is for us to deliberate and act from a fully informed place and not really as a knee-jerk reaction. We have to do it face to face. And with that said, Madam Speaker, the opposition supports the spirit of this motion. We certainly support the government meeting with the banks to discuss the possibility of reducing interest rates and whether or any further increases can be delayed, whether for 6 days, 1 day, 10, whatever it is. Whether it's for 60 days, as the Premier requested, or 24 months, as this motion contemplates, or some other meaningful time frame that can be agreed. We all support the amendment to the motion that government consider further restructuring the CIDB to be able to accept deposits to assist with lending our people. But again, I sound the caution. That is not an easy thing, and it's a challenging thing to accomplish, because what you are doing is changing the model upon which the CIDB operates, and you're exposing them now to third-party liability. Right now within the CIDB, it's all government money. It's what government decides to fund, and it's all governments capitalizing and lending and guaranteeing the debts of the CIDB. So again, it merits a discussion. Such a restructuring would need to be carefully done and considered to ensure that depositors are appropriately protected and that loans are adequately reviewed. Additional competition, in my mind, is always a good thing. That always benefits the consumer. What, however, does give us pause with this motion, Madam Speaker, is the final resolve clause that asks government to consider establishing an interest rate setting body. Madam Speaker, according to CIMA's website, this body is the Bankers Association because CIMA does not do it. But let me add some additional context, Madam Speaker. I understand that the present regime goes back decades and was worked out between the government and the banks. That is, the regime was implemented to ensure there is a logical mechanism that guides the movement in interest rates locally, particularly in determining the CI dollar prime rate. This was apparently to correct a situation where banks long ago utilized their own base rate or their own prime rate to determine their customer lending rates. Linking movements to US prime in US prime to CI prime was considered a sensible approach because from back in those days, our currency was linked to and fixed to the US dollar. So as one trades, and what you have to avoid as much as you can is having differentials in CI and US dollar rates, whether it's lending or deposit taking, so that you do not create an arbitrage. Because if you get it, it's more expensive to borrow in CI dollars. Customers going to go borrow in US dollars. You make US dollars more expensive to borrow, they're going to go for Cayman CI dollars in our economy. And similarly with US dollars. Banks do that sometimes depending on the type, on the currency that they want to attract. If they're in need of CI dollars, they may offer you an 1/8 or 1/10% more to get your money. Madam Speaker, as we all know, the CI dollar is pegged to the US dollar at a fixed rate. Indeed, the CI dollar currency is fully backed by the US dollar. I stated that earlier, and that cannot be overemphasized. In addition, as the economy of the USA and the Cayman Islands are inextricably linked, inflation in the United States does impact local inflation. We certainly know this is the case, though there is usually a lag between movements in inflation in the USA and the Cayman Islands. There is a well-known saying that's been around for a long time: when the US sneezes, Cayman catch a cold, right? And that is the same to this day. It used to be that when inflation increased, as prices moved in the USA, there was normally a lag of about 9 months. If there was a recession in the United States, you felt it in Cayman about 9 months later. But that has changed over the years. Because of the globalization of the world economy, it comes much quicker and it creeps up on you very quickly. I also understand, Madam Speaker, that most loans banks provide locally are sourced from their US funds. And that's consistent with what I was saying of just how much everything that we have is linked and tied into the US dollar. They keep their reserves in US dollars. Why? Freely tradable, freely exchangeable. There's no limits. But if their demand for CI dollar loans is bigger than what they are able to lend out of their own resources, they take US dollars and convert it to CI dollars and put it and make the loans. And it's just a book entry in their accounts. They can just take it out of their operating account and put it into their CI account and draw the checks against it to grant the loans. That's the way it works. And I think you only have to look, too, at what the government's borrowings are. A lot of them are denominated in US dollars, not CI dollars. When we look to put in that line of credit, it was in US dollars, $403 million. Why? Ever thought about it? Banks didn't have that kind of CI dollars laying around. And that was a commitment they were making to government to advance that amount of dollars. if we needed it. We had to do it in US dollars because the banks just simply didn't have that kind of or excess cash or reserves that they could in CI dollars that would allow them to make that kind of a commitment. Banks will lend you just about anything you want in this country if you can take it in US dollars. They can't do the same with CI dollars. Madam Speaker, the system we have enjoyed in this country has worked well and served us well over the many decades. The system today is not broken. In the past, when US prime rate decreased, CI prime rate decreased also. When US prime rate increased, then CI prime increased. But unfortunately, we have had as many increases to interest rates by the Federal Reserve as we have had over the relatively short time frame, then we have concerns. And for good reason. We have seen 10 increases, you said, Premier, over 14 months. An incredible number. Some of them as much as 3 or 4 months where you had a 0.75% increase in interest rates, in the prime rate, in the Fed funds rate and ultimately the prime rate. That's a shock to any system. I don't care who you are. Interest rates have now basically tripled in a 14-month period. That's hard for any business, any individuals to adjust to. Those same concerns, Madam Speaker, exist in the US, UK, Europe, and in our region as well, Madam Speaker, as their central banks have also increased interest rates to stop growing inflation. You ever turn on the business news in the mornings and listen to it? When you hear in the afternoon on a Friday, on a Wednesday afternoon that the Feds have raised interest rates 50 basis points, next morning, I can promise you, Bank of England is raising it too. And European Central Bank is following a day or two later. All doing the same thing. So we are all tied into what's happening globally. We are not unique in the situation as it exists. We are not unique. And we need to understand that. The question I have is whether there is a need for a separate rate-setting body or whether the current regime can be improved in some way, if improvements are needed. I believe that if we did have a separate rate-setting body, such a body must be independent of any sort of political direction or influence. And if that is the case, then that independent body would undoubtedly raise and lower interest rates when the US Feds raise and lowers theirs. And so, personally, I don't see the need for us to move down that road of a separate interest rate setting body. And so I'm suggesting caution with this. Let's have a discussion, but let's see what can be done or what is feasible. In Cayman, we have always operated with what is known as a currency board regime. And under a currency board, the management of the exchange rate and the money supply are given to a monetary authority that makes decisions about the valuation of a nation's currency. Usually, the monetary authority has a legal responsibility to back all units of domestic currency in circulation with foreign currency. Cayman Islands Monetary Authority performs this function, and they back the CI dollar with US dollar deposits and foreign-denominated investments. A currency board regime usually allows for the unlimited exchange of the domestic currency for foreign currency, and that's what we enjoy. Why? our currency is fully backed. You can freely trade and exchange your money for US dollars for CI dollars. Do you all remember the time when you couldn't do it? I know I'm getting up in there in age, but I do remember it. We brought that regime to an end in 1983. That's when I recall it ending. You couldn't have a US dollar savings, checking, or any other type of deposit in this country unless you had permission from the financial secretary to do so. We abolished them in 1983.
Yeah. When they done it, when they didn't want to say, well, destroy us, now destroy us? No, you have. And I can say, I tell you, but do now do something to help.
I hear you, and I'm thinking, I have said, there are things that can be done. As it is right now, Madam Speaker, CIMA also performs this role. Because of this, the CI dollar can be readily exchanged for various currencies, including the US dollars. In fact, if I'm not correct, I know I'm correct, you can take a CI dollar into CIMA and ask them to exchange it for you, and they're obliged to give you $1.20 or $1.21, $1.25, is it? Something around that. They're obliged to give you that in US dollar currency. A conventional central bank can print money at will, Madam Speaker, and that's what happens in the US. But a currency board must back additional units of currency with foreign reserves. A currency board earns interest from foreign reserves, so domestic interest rates usually mimic the prevailing rates in the foreign currency. As an aside, Madam Speaker, even an economy the size of Hong Kong operates a monetary authority system that utilizes a currency board similar to maintain a fixed exchange rate between the US dollar and the Hong Kong dollar. Hong Kong's currency board also has a 100% reserve requirement. So all Hong Kong dollars are fully backed by the US dollar assets, not Chinese yuan. According to the Hong Kong's Monetary Authority website, the linked exchange rate system has been implemented in Hong Kong since 17th of October 1983. Through a rigorous, robust, and transparent currency board system, the linked exchange rate system ensures that the Hong Kong dollar exchange rate remains stable with a band of 7.75 Hong Kong to 7.85 Hong Kong dollars to $1 US dollar. And the linked exchange rate system is a cornerstone of Hong Kong's monetary and financial stability, weathered many economic cycles and has proved highly resilient in the face of regional and global financial crises over the years. And Madam Speaker, I would say that same statement applies to Cayman and to our monetary system and to what we have here in Cayman. In summary, the stability of a country's currency is the primary focus of a currency board system. Keeping a stable exchange rate between the CI dollar and US dollar does protect trade between the US and the Cayman Islands, and in so doing is beneficial to our economy. It is a very simple but effective and efficient system. The alternative to a currency board approach is to have a central bank. However, the primary goal of the central banks is to provide their countries' currencies with price stability by controlling inflation, which they do by setting interest rates. But central banks have other functions, including being the lender of last resort to the banking system. But that is not the system that we have here, Madam Speaker. And so again, I ask for caution in exploring a separate rate-setting body. What we have works well, as it does for many places with similar systems, including Hong Kong. Madam Speaker, the goal of the motion is to help address the high cost of living and to ease the burden of increasing loan payments on our people. No one wants to see loan payments, especially for mortgage, go so high that they can no longer be afforded, and default and foreclosure threatened. But I have to say, regrettably, notwithstanding the fact that the banks have indicated that they are not seeing any significant increase in defaults and foreclosures. Madam Speaker, that is a very long lagging indicator. It takes time for those things to mature and to reveal themselves, because people try their best to keep their mortgages above water and to pay them on time. And when they crash, and the crash is spectacular for them, and it is catastrophic. Madam Speaker, I recall very well, during my time as Minister for Finance, we endured a rising foreclosure rate in this country until about 2017, 2018, before it peaked after the financial crisis of 2008, 2009. That's many years. That's how long it takes. So I'm not surprised that the banks are not seeing any real strong evidence of foreclosure. But with the system the way it is, the severity of the increases in such a short time, it's a matter of time before it reveals itself, and people are going to go into default. Madam Speaker, I don't know if any members here had read the Compass, I think yesterday. There's an article there entitled "Surging Mortgage Rates Causing Financial Havoc for Families Across Cayman." It is well worth the read, because the Compass went to great lengths to do some research and to find and to try and understand what is actually happening in the marketplace. Madam Speaker, I'll table this document, but if you would allow me to read briefly from a few sections of it. It gives the name of a lady who's a financial advisor. Speaking on the rising rate, she said the impact was being felt in all sectors of society. We have clients on six-figure salaries, and at the end of the month, there is nothing left. We look at their expenses, and there is nothing to cut. You've got to eat, you've got to pay your mortgage, your home insurance, your school fees. It has got to the point where there is little room for maneuver. While politicians have raised concerns about possible foreclosures, figures from the Government Lands and Survey Department and from the banks themselves suggest this has yet to materialize in a meaningful way. Another commentator, the host of Radio Cayman's Money Sense, is quoted as saying that cautions that there may be some time lag between cause and effect in this area. And that's what I'm saying. Or once people burn through their savings and exhaust resources to meet monthly repayments, he believes there is likely to be an increase in foreclosures. Lots of people have been shocked by the speed and size of the interest rate increases, but they have had some savings that have cushioned them in the short term. But the cushioning won't last for long. Gentleman from BQS International is quoted as saying that the industry was already starting to see an increase in valuation instructions from banks, both for collections and for renegotiated mortgages. The unfortunate reality is that we are likely to see an increase in foreclosure given the extent to which monthly repayments have increased. The conclusion, the article goes on to speak and says the consequences of those increases remain to be seen. The Wealth Financial Advisor believes foreclosures are likely to increase as people continue to struggle. She said some people are choosing to leave the island for less costly jurisdictions, while recruitment has become tougher amid rising costs. In the real estate industry, there has been a marked slowdown in sales. sellers will likely have to either accept lower prices than listed or wait for a longer period to find a buyer. So it goes on there. But the point is, Madam Speaker, within the industry here, within the Cayman Islands, there is emerging evidence that things are starting to change. And I think it's important to bear that in mind as we move forward. Madam Speaker, if I may, go ahead and table the article. Madam Speaker, no one wants to see loan payments, especially for mortgages, go so high that they can no longer be afforded and default and foreclosure threaten. Whilst we can and should have a conversation with banks regarding interest rates, it must also discuss that they do not automatically increase loan payments of existing loans when interest rates rise as they have. Madam Speaker, I know that within the banking industry, there has been some disparity. Some banks have increased it immediately or given a few days. One CEO of a bank told me, he said, in the last 14 months, we've only had 2 occasions where we took the step to increase mortgage payments because of the sharp rises. So you have a disparity in how banks are treating the increase. Madam Speaker, they rush to increase, but I don't believe, and in fact I know, when rates fall, they don't automatically decrease loan payment amounts. So this issue to me, Madam Speaker, needs to be a part of the conversation that we have with banks, as it is the increase in the loan payment that truly impacts existing borrowers. As an aside, government needs to consider what it has control over to assist our people with the high cost of living and the difficulties they are faced. I previously wrote to the Premier about this, including ensuring that the Water Authority does not increase rates and working with other utility providers to request that they do the same. Every little bit helps, Madam Speaker. And of course, a topic that I will continue to mention is for government to fulfill the private member's motion brought by the members for Georgetown West and Georgetown South to reduce stamp duty for all Caymanians buying property, particularly for first-time Caymanian property buyers. And with oil prices looking like they may be set to increase with the recent stated reduction in the supply of oil being pumped out by OPEC, let's temporarily remove the duty on fuels for the remainder of the year. I said that when we were debating the strategic policy statement. Yes, it's a bold move. And let's talk to the banks. But let's also do what we can do to reduce costs for our people. Every little bit helps, Madam Speaker. But returning to the banks, what we also need to include in our conversations with them is a recognition that during the years when we had historically low interest rates, banks were challenged to make adequate profits from lending to satisfy their stakeholders. So they increased fees to the public to improve their profitability. And it seemed as if during that time period, every day there was a new fee being added and charged. They charge you to cash a check. They charge you to buy currency. Personally, I have one bank account which I pay over $300 a year in banking fees just for the privilege of having that US dollar bank account. 300. Mind you, I'm a PEP, so I know there's a heightened scrutiny, but then I pay $10 a month for having access to the online system. I promise you, it's very frugal. And I mean, transacted 3-4 transactions a year. That's what I pay. We today are now returning to a period of high interest rates, and banks are starting to enjoy now a normalized spread. That is the difference between the cost of funds and the return that they are making on their investments. And when I talk about investments, I talk about their loans and other forms of investments. They have returned. The margins, the spread, is no longer compressed like it was when we were in a zero rate Fed funds rate in environment just less than 2 years ago. So I think part of the discussions with the banks could be to have them remove or reduce some of the fees that they are charging you. That, I think, is perfectly reasonable. Finally, Madam Speaker, there is a need for banks to ensure that as interest rates rise, they not only increase loan rates by the amount of the increase, but also deposit rates must rise accordingly. My understanding, as Premier alluded to in his debate, is that that margin, that spread, is moving up. And that is happening, and I was particularly glad to hear that, because anecdotal evidence that I had was that it was not moving sort of in lockstep, if I might use that term, with the increase in loan rates. So that, Madam Speaker, is the opposition's position on this motion. I'm looking forward to hearing what others will have to say, and hopefully we will find consensus here tonight with regard to this motion. As I said at the outset, Madam Speaker, we really support the spirit of the motion. We believe that what was in the motion is not necessarily something that we should pursue with all vigor in terms of the specific asks, but I do believe that there is scope for us to engage with the banks and to find some common ground upon which relief could be given by the banks. Madam Speaker, the banks in this country are an integral part of Cayman's life, our lifeblood, and our well-being. They have been, in many ways, so near and dear to many of us. I remember the times growing up when a new manager was posted to any one of the banks in Cayman. It was a big affair. And somehow, your bank, in those days, your banker was your friend. He looked out for you. And I would say that, and I happily say so. I happily say so. And so, Madam Speaker, those times have changed, and we have moved on from that sort of environment. But banks do have to play a role. And there are times when I do believe that, like this, there are things that they could do to assist our country and assist our people in making it through. It's time really to engage. I'm not satisfied. I commend the Premier, honestly do, for what he has done in writing to them, but I do think we need to step forward and open it up, and let's engage with them directly, face to face. Thank you, Madam Speaker.
As long as those up in here don't have big shares.
Thank you, Honourable Leader of the Opposition. I now call on the Minister for Labour and Border Control.
Thank you. Sorry. Don't know what power sometimes. Thank you, Madam Speaker. I want to offer some brief but comforting comments so the public can realize that some of us here are fighting for them. Madam Speaker, this private member's motion brought to this honorable House by a member from West Bay West, seconded by the member for Bordentown West, on interest rates. Madam Speaker. Yes, Madam Speaker, I am only one member, and these are my positions, really. And I can say to you, whatever we come up with, our people need some relief, Madam Speaker. All of us, me too including, I agree that we need a full-eared discussion with the banks in these Cayman Islands, Madam Speaker. And I also agree that SEMA could be the rate-setting body. That's my opinion. And I would encourage this government to amend as it's untenable as the U.S. announced their interest hike. Whilst the announcement is being made, we get an email from the bank. I am making it clear, Madam Speaker, what is happening in these Cayman Islands and the manner it's happening will leave most of us homeless or in default. The electorate or homeowners, Madam Speaker, gets an email and we follow the advice of the bank. And we have few options when the email is sent. And in most cases, no recourse. Madam Speaker, we are expected as the elected arm, as Parliament, to be the voice of the voiceless and be the conscience. Madam Speaker, we need to fight on behalf of the people of this country. And I am sure a lot of people in this House, all 19 members, want to fight for the people of this country. But we can't go into fight, Madam Speaker. We cannot go into the fight with a sandwich in our hand. We need to go into the fight with boxing gloves on if needed. I came into politics, Madam Speaker, to help my people. And I pray that's what everyone is trying to do in this House. How can we face our people, Madam Speaker, in this country if we have not tried our utmost best to ease their pain? Groceries, utilities, Madam Speaker, fuel, everything is high sky blue, and our people need relief. I've never heard of more Caymanians, Madam Speaker, threatening to leave the island. And when you ask the reasoning for them leaving the island or wanting to, it says the cost of living is the number one thing. I can't live here anymore, they're saying. And Madam Speaker, this is not just the blue collar. Not just the blue collar. Let us not be fooled. What are we thinking, Madam Speaker? Are we happy with this? We need to act fast, Madam Speaker. We can't be messing about with this. We need to act fast. People need help from last year. We have enough expertise to do so, Madam Speaker. Madam Speaker, we need to support an aggressive initiative to find resolve. Let's stand up when our people need us most, Madam Speaker. We have just been fully open now about 1 year since last June. Let us not forget, Madam Speaker, and I keep reminding people, and I don't hear much people mentioning it. We had 2 years of COVID when a lot of businesses in the Cayman Islands and around the world, a lot of sectors were shut down for 2 years. So you heard us talking about earlier about stipend. We cannot recover, and I didn't hear anyone say here tonight, we cannot recover 2 years of a pandemic, never seen in over 102 years. We cannot recover in 2 years from 2 years of non-activity. Our people are hurting. No one has been in this situation ever before. None of us are alive. At least not many of us. Some of us in here probably were alive 102 years ago. But Madam Speaker, if we sit here and talk about notice to the customers, 2-month notice, 60-day notice. Yes, any notice is good, Madam Speaker, but we are missing the point. Yes, notice is good, but we are missing the point, Madam Speaker. I repeat, because if you tell the regular blue or white collar person that they are raising their rate for their mortgage in 3 months' time, where will they get the funds in 3 months' time? Madam Speaker, will they get a raise in salary? Will any of you help them, Madam Speaker? Or will a friend or a next door neighbor help them? And for how long, Madam Speaker? This is what's happening right now. Madam Speaker, we need to exhaust ourselves trying to find a way. First, the nice guy's way, which normally doesn't help. Then we need to use other resolves or resources to help our people. Some people are reporting 20 to 40% increase in their mortgages. Tell me who gets a 40% raise annually? My mortgage gone up almost $2,000 in less than a year. Madam Speaker, everybody is feeling the pinch. Everyone. All people are talking about now is mortgage and CUC. They're going to soon make a rap song out of it. Maybe the guys who get an annual bonus can afford it, but not the regular worker, Madam Speaker. So we can't just give up, and we just can't give a doom and gloom effort. We have to do whatever it takes, not just with the banks, Madam Speaker, but all of the others costs that are causing our people havoc and sleepless nights Madam Speaker, and then only to come to 2 hours of no east-west traffic. Madam Speaker, there is no choice. We have to answer the call as we are elected to do, Madam Speaker. Madam Speaker, we can't debate like we're trying to find excuses for the banks. We must give our people hope, and they must feel like we got this. The 19 people that I elected in government to represent all 3 of these Cayman Islands, they got this. I can go sleep comfortable tonight because I heard them in Parliament tonight, live, saying, we got this. Count on us. Can they count on you to give them some hope, Madam Speaker? The government of the day is very important, but all 19 members of this honorable house is most important. I hear the leader of the opposition, a good friend of mine, about needing to be informed properly, and I agree with the leader of opposition 100% that we need to be informed to make the correct decision. But, I give him that one. But, Madam Speaker, I do not have to go to another meeting looking information from my people who are hurting to know that they need urgent relief. I'm already informed about that. I hear it every day. Madam Speaker, the question is, are we trying to help our people? Are we willing, or are we willing for the banks to be enriched? All these things, Madam Speaker, is good discussions, Madam Speaker. What our people don't need is a banking lesson. But our people need relief on their pockets, Madam Speaker. My short presentation tonight, I hope it was impactful. I hope it gave our people hope that someone is standing up, trying to make a difference for them. May God bless the people of our country, and may you see a glimmer of hope by this passing through this honorable house. God bless you all. And I ask the opposition and the government for some support, even with amendments, to find a way forward to help our people. Thank you. Good night.
Does any other member wish to speak? Does any other member wish to speak? The Honourable Minister for Investment, Innovation and Social Development.
Thank you, Madam Speaker. I rise to provide my contribution on private member's motion number 16, 2022-2023. Madam Speaker, I look at this motion and the others to come, although probably not tonight, as vehicles to motivate discussion on how we help our people in the current economic climate. Cost of living is at the top of all of our minds. So these motions are good and they're needed to have us generate ideas. I'll admit that when I first glanced the motion, I had some hesitation on how it was worded, particularly in terms of reading about establishing an interest rate setting body, which could take significant time, funding, resources, legislation, new appointments, staffing, which at the end of the day may not prove to be necessary or perhaps even backfire. But it doesn't mean, and as the mover of the motion cleared up, that it doesn't necessarily mean some entity that's totally independent. It could be a variation within the monetary authority. The other point to make is, I first read the motion, and I think this may be what's partly on the Premier's mind, is as if government hasn't been meeting with the banks. And we have been. The Premier pointed to a meeting last year of myself. He was included, the former Deputy Premier, and the Premier there was there as well. The Premier has met with the Bankers Association subsequently. I've met with the Bankers Association subsequently on this question in Q1 of this year. And what I think the bankers describe, they have valid points too. But I believe because of the continued interest rates, we do have to have a discussion on what needs to be done or what could be done. I called a few individual bankers in the last few days because I think, and I told them this, in their response to the Premier, I'm not sure they used the best language. Because I don't know if a lot of folks knew what it meant to say they're not seeing material deterioration in their loan portfolios. A lot of folks that I know of all different demographics took that to mean, so what are they saying? They're not going to throw a lifeline until we all go overboard? I don't think that's what they meant, but that's how I believe it came across. And I've said to some individual banks, if the banks respond, say, to the discussions in this House, or as meetings continue, they may want to expand on what they meant by that. So when I asked these two different institutions what went into that messaging, they suggested, but look, a lot of the loans officers and managers are Caymanians too. And we're trying to bend over backwards for customers that are coming in to restructure their affairs, restructure their packages so that they don't default. So that's part of the reason why you're not seeing as many members of the public default. I said, well, you need to then tie that language to that phrase because a lot of people still don't know what that means. You need to set out exactly what you have been doing for your customers in more detail and how other people might be able to learn from that, who may not have approached the bank, might be quietly struggling to rub pennies together to pay without knowing that there are other options that you might offer. What also gave me pause recently, and Deputy Governor, you might be very interested to hear this, as all the other members. Every 2 or 3 weeks, the policy team in the Ministry of Financial Services and Commerce gets together that we talk about current streams of work, new proposals of legislation. And on this particular occasion, about a week and a half ago, I was running late, and I got to the meeting about 15 minutes behind schedule. And when I walked in, there were 7 to 8 highly trained policy officers, all upset at the way that the banks answered the premier and sat out in painstaking detail the kind of reforms that we should be thinking about. So although it was completely off the agenda, I said, talk to me. What do you think that we can do? And that's before this motion was filed. I said, look, Minister, I think we need to get a multi-agency working group alongside the regulator of the Monetary Authority to really think about some banking reform measures. We're not saying they're all going to work, and we're not telling you to announce this as government policy yet, but we're telling you you need to start to think about this. Let us loose. Turn us loose to do some research, do some analysis. So I said, wait a second. You all are asking for more work? Yes, because we're impacted too. We've got to pay these bills. This is affecting us and our families. So I said, okay, talk to me. What do you think could be analyzed? If I issue an email to the chief officer who wasn't present, so you'd also be happy to know this wasn't coming pressure from the chief officer. This was organic. Look, let's see if we can start looking at greater disclosures of transparencies, of understanding more of the rates, the fees, the bank's profit margins in a more transparent way. Let's have some more eyesight on that. Let's look at whether or not we can implement a deposit protection scheme that's missing from Cayman. Yes, that costs money, but we need to have this discussion now. Let's talk about the mechanisms to adjust rates. Maybe it's not, and they brought up a separate interest rate setting body, but maybe it's a mechanism that can be adjusted in legislation that SEMA can introduce a lag or a staggering into the rate to decide whether or not market forces dictate whether it should be implemented as quickly as the banks may think. Let's think about introducing some stress testing criteria about the affordability of certain products and make sure the public understands the terms. Perhaps we can introduce a financial ombudsman to adjudicate claims that the customers may have about alleged unfair treatment. Should we start to consider introducing reverse mortgages? So I was heartened by the effort that was unprompted by me, heartened that this group of mixture of non-Caymanian and Caymanian policy officers took the initiative to say, let's put together this working group. So when I read the motion, I had some trepidation about the language to establish an interest rate setting body because I know that there are other measures that we can explore. But Madam Speaker, I think what I'm hearing from majority of members, or at least all the members who have spoken so far, and the Premier included, is that these things will take time, they will take analysis, they'll take research, and I don't know, as good as that might be in the long run, and maybe these reforms will come about over time, that they're needed to advance, but they're not the quickest solution to get relief to our people now, today. Where I think there are things, there are multiple of things that we can do, but I think there are things that we can start to look at that Cabinet can prove next week. We've been talking and having internal discussions, and I know budgets are tight, but is it time now for our seniors and veterans, for their permanent financial assistance to be lifted from $950, a couple $100, to something that we all can hand on heart say you can survive in Cayman off of? The member for West Bay West raised this in his contribution Finance Committee last night. The odd 10% that the seafarers have to pay for Cineco insurance that none of the other permanent categories have to pay. And when I made inquiries about this with NEU, who then consulted with Cineco management, nobody could explain the rationale. If no one can explain it and there's no policy underpinning for it, let's move it. because then what happens is when they come home to pay the 10 grand, they go back to NEU to get more money. So we're not getting any further ahead. Let's drop it. Do we need to start thinking about other ways to expand the revenue base? Try to utilize our stamp duty, which is part of our indirect consumption tax base, to provide relief to Caymanians. I recently returned from Singapore and learned that they introduced 60% increase on stamp duty on foreign sales of land. Now, I'm not saying that we moved to that rate, but they knew that they had to do something to help their people, something that's more immediate. So let's think about adjustments that we can make now. Other license categories that have made handsome incomes, and the fees that they pay may be disproportionate to the handsome incomes that they make. So I think there's a variety of things that we need to sit down and think about and introduce while the policy research for some of these other areas takes place. And as the Premier indicated, I really do want to explore that one bank has come forward with a proposed arrangement to freeze rates for the rest of the year. I need to follow up with the Monetary Authority to see if the arrangement is palatable from a regulatory standpoint. But we need to pursue that, because maybe it might be a signal to a couple of other banks to then decide whether they might be able to freeze for the rest of the year. So, in a nutshell, Madam Speaker, to make it clear, I would like to work with the mover of the motion to introduce a couple of amendments, mild amendments, I think to reflect more accurately what I believe we're all saying here. So instead of it be it therefore resolve, the government consider meeting, the government consider continuing to meet with the banks. And instead of it reading on the second proposed resolution, it be it further resolved that the government considers amending legislation to establish an interest rate setting body, continue the sentence, and other relevant banking reform measures, so that we have a range of proposals that policy analysts can consider, review, and provide back to Cabinet for proposal and adoption. So I think we need, if the mover of the motion would agree to that, I think the government would be in a much clearer and better position to support the motion. And we, as the government, take that two-step approach of immediate relief that can come through now, and then work in the background for longer-term reforms that will benefit Cayman, whatever is adopted in the long run. And people might think that certain things are small, but another $250 in the hands of our seniors will also benefit those who are their adult children, who are also on the side, as DCFS is always reminding me that my age is called the sandwich generation, where folks are living longer and you're having to take care of your advanced elderly parent and your child. That might be more money that the adult child can save to not have to have additional money to go into the senior's pocket and be able to be just a little bit more comfortable at the end of the month while we ride this period out. So I leave that with my colleagues and dear members of this House for consideration. And the member for West Bay West took some liberties and asked the parliamentary staff to draft, in the spirit of cooperation, the amendments that I proposed. Thank you, Madam Speaker.
Does any other member wish to speak? Does any other member wish to speak? The member for Bodden Town West.
Yeah, bring it. Something to lean on. Madam Speaker, as I listen to some of the contributions here this evening, I am reminded of a story during the Cold War era where something had happened in one of those old Baltic states or an old Soviet Republic type countries where the military went and did something they shouldn't have done. And the president at the time got up and took responsibility for what the military did. When the Cold War ended and the Iron Curtain came down, they found out that the president actually didn't even know what had happened. So the person who was interviewing asked him the question, why did you get up and take responsibility for something that went bad that you basically had no knowledge of? To which the president replied, in politics, it is better to be incompetent than impotent, because incompetence you can fix, impotence you cannot. I say that to say, Madam Speaker, and I want to thank the member for West Bay West for bringing this motion. I remember he and I sitting down, having a conversation on the motion, and I said to him that I would support it because a conversation needs to take place. As I'm sitting here earlier pondering, my mind reflected on Roy Bodden from Bodden Town. And I remember that fateful day back in 1990. I took my mother's Toyota Cressida that I used to drive down to Horizon Autos where he worked. And he said to me, young Saunders, what are you planning on doing it yourself? I said, well, still in between, here, there, the normal basic answer. And he said to me, the deadline for registering for the SAT is this Saturday. Go and register, get at least 850, and apply for a scholarship. I did. I remember that day also at the late, well, it may not show, used to have a gym called Creative Bodies Gym in Yucatral. I was there one afternoon, and Mario Eubanks was in the gym. It could have been one evening. And he says to me, you're Chris Saunders? I said, yes, sir. He said, we approved your scholarship today. I was so excited. I just left in the middle of my workout and went home. I was so happy. And with that, Madam Speaker, I want to publicly thank the government of 8892 that gave me my scholarship. That government had Ezra Miller in it, Linford Pearson, Norman Bodden, and Benson Eubanks. Names I will never forget. Equally, Madam Speaker, when I started university, I did not apply myself the way I should. I got let loose in New York. I was partying like crazy. So much so that my GPA in the first year was 1.69. D plus or something like that. And I dropped out of school. I couldn't be bothered. University wasn't for me. But Madam Speaker, I got a second chance. Rather than pay back the money, I had the option to go back and finish. And I'm eternally grateful for the government, or the national team government of 92 to 2000, who gave me the opportunity to go back to university. I say two members, the member for West Bay West and the member for Cayman Brack, East, I think, were also members of the national team government at that time. And I want to thank them for that second opportunity. And that's one of the reasons, Madam Speaker, why I am very big on second chances for people, especially when it comes on to education. I say that to say, Madam Speaker, is that during my years of working in government and going to university, I was always encouraged to think outside the box. I was always pushed to think outside the box. You know, I came from a generation where scholarships were not as readily available as they are today. And so to get a scholarship back in the 90s was actually a big deal. Today, once you can get the grades, you're literally almost guaranteed. And that's the progress that we have made as a people. But for my generation, Madam Speaker, who was given that opportunity, we were given the opportunity on the basis that we go away, we get an education, and we come back and we serve the people of the Cayman Islands. And I am very humble and privileged that I have the ability and opportunity to serve them in this honorable house as their representative. So, Madam Speaker, I say that to say this. Sometimes the problem that we have isn't the problem. Sometimes the problem is the way we choose to look at the problem. We are asking the banks to do something that the banks are not designed to do. I'm going to say that again, Madam Speaker. We're asking the banks to do something that the banks are not designed to do. And I'm going to put this in context, Madam Speaker. When you look at the deposits in this country, most of the deposits are short-term deposits. We're asking the banks to take short-term money, overnight money, money that may be on fixed deposit for 5 years, and lend them out for 25, 30 years. That is a major risk, especially considering the passage of time. I said this before in my SPS debate. What we need in Cayman is a capital market. We need that secondary market. It is not new to Cayman, Madam Speaker. It is something that just about every country or every industrialized country or every developed country is something that they look at. One of the most popular of all of those is, Madam Speaker, is Fannie Mae. That was started, I think, around 1938, 1939, during the Great Depression, as part of the New Deal that was brought in by Franklin D. Roosevelt in the Depression era. A couple decades later, around 70, 71, President Nixon brought in Freddie Mac. So Fannie Mae and Freddie Mac. The primary difference between those two is Fannie Mae deals with the bigger banks primarily, and Freddie Mac deals with the smaller banks. And the whole idea behind that, Madam Speaker, is that you take all of these mortgages, you bundle them, you put them in a bond, and investors buy them. And the banks, when they sell it, basically gets more money again to consider basically lending. So you keep the bank with liquidity. You free up liquidity within the banks. And then on top of that, you basically allow investors to invest. You get longer term money. Last weekend, Madam Speaker, I was in Florida visiting my cousin, starting my back to school shopping early and everything else. We talk about 10 interest rate increases on the Fed rate. Do you know how much my cousin's mortgage went up by? What percentage? 0. Our friends that went to school in college, one of them in Atlanta owned around 5 homes. You know how much his mortgage rate went up by? 0. Simply put, Madam Speaker, their mortgages aren't tied to the Fed rate. Their mortgages are tied to the bond market. Even right now, in the United States today, the average rate for a mortgage is around 6.7%. It's a mortgage rate on a 30-year fix, 6.7%. If you went back a year and change ago, you could have gotten a 30-year mortgage like 3-4%, fixed for 30 years. That is long-term money. That is money that you can go out and you can tap into investors with. And this is what is needed in Cayman. Madam Speaker, we recognize from early, we kind of saw this coming. And Madam Speaker, I am pleased to say that during my time as finance minister, I did reach out to the Cayman Islands Development Bank, asked them to reach out to the Caribbean Development Bank to see what we could have obtained from them in terms of lending. And I'm pleased to say, Madam Speaker, that before I left, we had got a proposal from the Caribbean Development Bank to extend a line of credit to the CIDB for $100 million at 4.75% or something. As a matter of fact, I think I may have the document. It's a good thing I like to print stuff and read it at home. So I end up with a lot of stuff at home. Trump? Oh, yeah. I think the exact thing, Madam Speaker, is in clause 5 of the memorandum that they had sent to the board, which I was copying at the time. It says, Caribbean Development Bank will finance a technical assistance project for the diagnostic review and restructuring of CIDB and appraisal report for mortgage line of credit in the amount of US $100 million to meet about 60% of outstanding demand for housing by low to lower middle income Caymanians. Madam Speaker, at the time when I reached out to Chairman Scotland to look at that, the main thing that we were looking at was our seniors. People above the age of 60, Madam Speaker, or even 55, who was close to retirement age, cannot refinance past 65, would have been more affected by the rise in interest rates than, say, somebody in their 30s or 40s who can refinance out in a longer period of time, get an interest rate that they could, or interest payment that they could manage. So let me phrase it, who can refinance out a longer time and get a loan payment that they can actually manage, but our seniors wouldn't have been able to do. Wouldn't have been able to do that. So the whole idea behind that is that, one, we're looking at people above the age of 60 or above the age of 55 who would have had maybe about 5 to 10 years left on their mortgage, which would mean that throughout that period of time, they would have developed considerable amount of equity or built up a lot of equity in their property at the time. So their risk would have actually been quite limited from a banking standpoint in terms of the loan to value ratio and everything else. And then just charge them a rate slightly above what it is that we were getting at the time to at least lower their payments. But that was the genesis behind it. I don't know what has happened, and I would encourage the government and the new Minister of Finance to explore that possibility to at least give our older folks, those who are close to retirement, at least some relief. Because I can tell you, Madam Speaker, I still remember that call that morning from the one lady who basically, when she realized that she had to work 3 more years past retirement just to keep a loan payment to what it is, that is still not lost on me. And that was one of the driving forces behind getting that facility in place, or looking to push that facility for our people. So, Madam Speaker, the mover of the motion, the member for West Bay West, spoke about utilizing Cayman Islands Development Bank more. And what I can say to you is that the process had started, and I will ask the government and encourage the government to continue down that path to see exactly what we can do to offer at least a quicker relief to our more older population who are closer to retirement, so at least they can at least get a payment that they can manage and don't have to find themselves working much, much later or really in a stressful situation. The second point I want to raise, Madam Speaker, is going on to the banks itself. When we look in terms of the challenges that banks themselves have had, I mean, the 2008 financial crisis has not been lost on me. I mean, even the recent bank failure of Silicon Valley Bank has not been lost on me in terms of the volatile times that we're living in. But these are the adjustments that we need to make. Because at the end of the day, Madam Speaker, we're still talking about institutions that take in other people's money and then trying to tell them what it is that they want to do with it. Madam Speaker, I did a quick look at SEMA's last banking survey report as of June 30th, 2022. That's available on their website at gov.ky. And Madam Speaker, what I can say in CI equivalent, we had a total of $2.4 billion in residential loans, $2.4 billion. And we had $1.2 billion worth of commercial loans. But Madam Speaker, when I go and look at deposits, SEMA at that time had roughly $11.3 billion, a little over $11.3 billion in deposits, of which $8.8 billion are residential deposits and $2.5 billion were non-resident deposit. When we look at the residential deposits, Madam Speaker, I notice that the figure is actually $2.4 billion. So in essence, Madam Speaker, we have $2.4 billion of residential deposits as of June 30th, 2022, and we have $2.4 billion of residential loans at June 30th, June 30th, 2022. I say that to say, Madam Speaker, if we have a situation, bearing in mind that nobody is going to go out there and lend 100% of their money. Normally on residential, you may lend maybe 60 to 70% of residential deposits. Some banks may do 30 or 40% of the residential deposit, which they refer to as sticky deposits. But the bottom line about it is, Madam Speaker, when you look at the current Class A banks that we have, they are maximum length in terms of using residential money collectively. Each bank individually, it may be a different story, but I'm just looking at the collective numbers that is available on the SEMA's website. The challenge, Madam Speaker, that we're going to run into is that when you do realize now that the rest of our loan book is actually financed by literally overseas money, then the question is this: if you start tinkering around the interest rates or the deposit paid on interest rates, this money can leave overnight. People go where they can get the best return for their money. And one of the things, Madam Speaker, to put this in context, and I'm trying not to get overly technical, but maybe sometimes I can't help myself. Part of the 2008 financial crisis was caused by one, even though Bush got blamed for it, it really goes back to Clinton in 1999 when he repealed the Glass-Steagall Act that was put in place during the 1930s Depression time to separate investment banks from basically the traditional banks. They dismantled that, they lowered regulations. And then the other one is when they moved from Basel I to Basel II, which they basically realized that they actually encourage more lending on residential loans as opposed to commercial loans. Just to kind of put that in context, Madam Speaker, just to simplify it. Under Basel I, when it first came out, banks had to set aside, in terms of risk-weighted asset, 100% of capital for commercial loans and 50% for residential loans. Under Basel II, they kept it 100% for commercial, but 35% down for residential. So in essence, it was almost easier to lend 3 times to residential as opposed to commercial, because that way your capital is better deployed. In short, Madam Speaker, it's the same as you lend it to the employees, but not to the employers. And in essence, everybody went out, they went crazy, they're making all of these fees, and then when they ran out of good customers to lend money to, those customers they referred to as prime, they went subprime, looking for the customers who weren't that great, and basically created this mess. And I'll get into some of this more as I get into the pension stuff later on, Madam Speaker. But the point I'm making in this, Madam Speaker, is that we have been blessed and we have been lucky that despite many of these challenges, we have not had a lot of these banking problems that many other countries have had. And we need to make sure that we do not create an environment where we start going that route anytime soon. You know, when I remember as the US dollar is having its own challenges right now, people are basically start looking at different avenues or different ways in which they can diversify in their very investments and everything else. But the thing about it is, Madam Speaker, is that, as the leader of opposition pointed out, most of the deposits in the banks are in US dollars. They're not in Cayman Islands dollars. And as such, they are subject to the US interest rates. We have seen what have happened in the UK recently with the rise in interest rates. They are their own economy, and they are their own bond crisis, currency crisis, everything because of rising interest rates in the US. So it is a very complex type thing to look at. But at the end of the day, Madam Speaker, we need to have solutions for our people. And the truth of the fact, as I mentioned before, having over $2 billion of loans subject to a variable rate that every time the Fed moves, we move in a consumption-based society, it is pure, unadulterated madness. This can't continue like this. The system was never designed for this. When the Fed raises rates to curb inflation, they're looking about new stuff that they're trying to stop, not existing stuff. If the amount of the US loan book was subject to 5% increase, I can tell you it would have been crazy in the US. Politicians would have basically been dragged out, tarred and feathered. If the average US person that had a mortgage had to basically find themselves now paying even twice the mortgage rate that they had, it wouldn't have been like that. The other issue you need to also factor in, Madam Speaker, is that even in the US, your interest expense itself is tax deductible. So even if you end up paying more in some cases on your credit card or a vehicle loan or something, it is still tax deductible. So there are other benefits that we need to also look at. But Madam Speaker, the one thing I want to really get out from this, and this is the part that really scared me the most when I looked at what was happening here. One second, I need to find this here. Yeah. I think about the young people, Madam Speaker. I think it's safe to say that everybody inside this house already have a mortgage to some extent. But when I look at the current interest rate for mortgage in the US, a 30-year mortgage, which as I said is 6.7%. And we have a situation right now where we're talking case of 10.25%. When you consider, Madam Speaker, that just over a year and change ago, that the prime interest rate at 5.25%, just in a rough calculation, if you had a $300,000 mortgage, you'd be paying roughly $1,657 a month. You're now paying $2,688, which is an increase of, which is a substantial increase of basically over $1,000. If you had a mortgage, again, these are using 30 year as a thing, and you'll soon understand why. If you had a $400,000 loan, you're paying $2,209. It is now you're paying roughly now $3,584. If you were at $500,000, you're paying roughly $2,761. You're now paying just under $4,500. And if you're paying $600, if you had a $600,000 mortgage, you're paying just over $3,300. Now you're paying just under $5,400. These, Madam Speaker, are massive increases in a consumption-based society. And if you think that this is not a problem, Madam Speaker, I'm going to show something to you. And again, I'm going to go by memory. In the first half, when we put together the budget for 2022, Madam Speaker, we were forecasting customs revenues at the time of roughly $242 million. The previous year before, I think we did around $206 million. So we're looking at around an 18% increase between 2021 and 2022. For the first 6 months of 2022, Madam Speaker, we are running at 18% above in terms of customs revenue compared to 21 to 22, which was in line with the budget forecast. But in the last 6 months of 2022, Madam Speaker, we saw where that number started to drop. And that is when, Madam Speaker, the minute more people start paying more on mortgages, it means that they have less to go to the supermarket. That means you're importing less. It means basically making less customs revenue. So we're already getting hit in terms of even government finances just on customs revenue alone. The other issue, Madam Speaker, is when you also factor in now the house insurance that has gone through the roof. Again, if you're paying more money for house insurance, it means you got less money for the supermarket. That means that's less money again for customs coming in. That means, again, that's less revenues right there for government. And then on top of that, Madam Speaker, yesterday we saw again where the price of oil is getting ready to go crazy. Saudi Arabia got up and just said, you know what, we're cutting by $1 million barrel a day, 1% of the market. So as soon as that shock comes in again, and again, even before that, we're talking about looking at May's fuel factor rate of 19 point something cents a kilowatt hour. You can expect by sometime over the summer or later on, that's going to be north of 20 cents again, when at one point it used to be 11 or 12 cents in terms of kilowatt hour. So we are bracing, Madam Speaker, for a lot of money at the same time coming out of a lot of people's pockets. And the question is, what it is are we going to do? Are we going to continue and just basically say, well, this is a system, this is what it has always been, or are we going to do something about it? Are we going to sit here, all 19 of us in this house, and just basically put ourselves as being politically impotent? Madam Speaker, it does require some hard decisions. And I'm going to say right now, Madam Speaker, one of the first things I would encourage the government to do at this point is reach out to the Caribbean Development Bank, secure the line of credit, and start with our seniors or more vulnerable people whose loan to value is actually quite low. They have a lot of equity built in their house. Their credit risk is actually quite low. And let us see if we can cut their mortgage interest payments down from 10 point whatever percent it is that they probably be paying to maybe 5 or 6%. And it still will not be a problem for us. The letter is there. We did the legwork. We just need a matter now of getting that done. I think that's one of the first things that we can do. And you may be surprised how many families we will probably end up helping that way. A lot of these people will have maybe $100,000 or $200,000 left on their mortgage. $100 million can go quite far in terms of helping many of those people and at least start reducing their payments. For the younger folks coming out, they can go back and say to the bank, listen, can we extend in terms of the duration of the loan, so at least the monthly payment will at least come down until interest rates start to drop, which may probably happen around late 2024, 2025. Unless the US has some major recession by this year, you may see something happening. Outside of that, Madam Speaker, we can't sit here and just wait or hope. Hope, Madam Speaker, is not a policy. Waiting and seeing, Madam Speaker, is not a policy. What people want is action. And this is what it is that we need to do. And I would say, Madam Speaker, the Honorable Minister of Investment spoke about reverse mortgages. Again, that is something that we need to look at. Because again, those are the kind of things that are available to people. We need to recognize, Madam Speaker, the Premier talked about 1980 when interest rates were crazy. The world has changed a lot since 1980. It's a new place now, Madam Speaker. And it's not a matter of what they did back then. It's a matter of what it is that we're going to do now. And the people want action. And I would say, Madam Speaker, the process has already been started. Let's see if we can move forward with it. As for the banks, I can tell you, Madam Speaker, they ain't going to do nothing. Because the truth of the fact is, the minute they don't want to pay anything on their deposits, the people are going to take the deposits and go someplace else. And the last thing, Madam Speaker, I want to put for the Minister of Investment to look at. As I said here earlier, I looked at SEMA's report for the entire banking sector in the Cayman Islands, both Class A and Class B. Does anybody have any idea what is the total profitability for the entire banking sector as reported by SEMA for 2021? Does anybody have an idea? I will tell how much? I will tell you, Madam Speaker, it's $3.5 billion US. Now, of that amount, 228 million US belongs to the Class A retail banks, and the remaining 3.2, 3.3 billion is all the different Class B banks that are sitting here. Madam Speaker, the Cayman Islands financial sector was built on banking. Maybe this time now, if we can't get any cooperation from the Class A space, let us go and look at what we can get done in the Class B space. We need to start thinking outside the box. But you can't sit down inside this country, Madam Speaker, and have billions of dollars, billions. If anyone take a quick Google right now and look at how much US debt treasury or US treasuries that is held by the Cayman Islands entities, it is over $200-something billion. We are like number 5 or number 6 of foreign governments that actually own US treasuries. Over $200 billion. And what are we talking about, Madam Speaker? A loan portfolio, residential loan portfolio of just over $2 billion. The money is here. Let us see what it is we can do. If we can't get cooperation from the Class A, let us look at the Class B. Some Class B can only lend to their employees. Maybe it's time now for us to take a look at it. But this is what it is that we need to do, Madam Speaker. It can't just be a matter of sitting down and saying that this is the way it is, this is the system. So, Madam Speaker, just to collapse everything into one closing argument, start with reaching back out to the Caribbean Development Bank for the $100 million line of credit. I think was at 4.75%. If we can even lend that out at 5.5%, it is still way less than what a lot of people are paying. And I would say earmark that money for people above the age of 55 or 60, depends on how much room we can have. Their loan to value is quite low. They've built up a lot of equity inside their property. So the risk at this point is very limited. You're talking about $500,000-$600,000 real estate property where the balance is only $200,000. So the risk to the development bank at that point, Madam Speaker, is actually very little. And if they default, I guarantee you in this environment, you'll have no problem selling a $600,000 house for $200,000. People, Caymanians, will buy that up like tomorrow. So that's going to be a risk issue for the bank. So that's the first thing. The second thing, Madam Speaker, is a matter of reaching out to the Class B banks and seeing what it is that we can do to get some kind of assistance from them, because they do have liquidity. Madam Speaker, the amount of money inside this country is mind-boggling. It's here. Let us see what it is that we can do. And some of these banks, some of them are from even other different countries that have certain programs in place that the government give them as a tax write-off. If you do this low income or low data or whatever, they actually get tax benefits for it. These are some solutions that you can do, Madam Speaker. And then lastly, which will take a little more time, start looking at getting the capital markets. Stop thinking the banks are going to be a savior, because what we're asking the banks to do, it is too much risk for them. And Madam Speaker, I'm old enough to remember when, I think it was, we had a couple of bank failures inside Cayman. I remember one friend of mine was almost comatose on sport for like 5 days, couldn't move. His entire savings gone. You know, so these are times that we're living in, Madam Speaker, but it's time for us now to think outside the box. And colleagues, I will say this to every one of us inside here. We are all old enough to remember the good old days in Cayman. But we're now living in a new world with a new time, with new challenges. We inherited a Cayman that was good and a Cayman that was strong. But in the end, colleagues, we're not going to be remembered for what we inherited. We're going to be remembered for what we leave behind. And I'm going to tell you right now, it's time for action. It's time for us to start moving. Thank you very much.
Does any other member wish to speak? Does any other member wish to speak? Does any other member wish to speak? Does the mover of the motion intend to move any further amendments or exercise his right of reply?
I plan to do all two. Both or all two? All, both, anyone you want to call it. Madam Speaker, I intend to amend the motion as I agreed with my colleague, the member from West Bay South and the Minister of Financial Services. The amended motion, Madam Speaker, says, in accordance with the provisions of Standing Order 25.1 and 2, I, the elected member for West Bay West, seek to move the following amendments to provide to private members' motion number 16 by amending the first resolved section to read, be it therefore resolved that government considers continuing to meet with the local banking and money lending institutions to discuss reducing interest rates immediately and not increasing interest rates for the next 24 months. And 2, by amending the second resolved section to read, and be it further resolved that government considers amending legislation to establish an interest rate setting body and other relevant banking reform measures. The last resolve in the old motion will remain. Be it further resolved that government considers amending legislation to establish an interest rate setting body. So that all the amendments, I think, have been passed out to members. And so that's the motion.
Is there a seconder for the amendment to the motion?
Madam Speaker, I rise to second the motion.
I rise to second the motion, Madam Speaker. The third, no.
No, that's a good
The
feeling.
amendment has been moved. Does the mover wish to speak on the amendments?
Madam Speaker, I will. I tried to get and copy everything in one, but
Just for clarity, since the amendment was already prepared and it has been down to be seconded by the Minister for Investment and Innovation, can I just ask the member for Bordentown West to rescind your seconding?
I rescind my second of the motion, Madam Speaker. Thank you. The amended motion, thank you.
Quite a strange request, but thank you.
Much obliged.
Does the mover of the amendment wish to speak thereto?
no, Madam Speaker, I intend to wind up on the full motion when it is amended.
Does anyone else wish to speak on the amendment before we move it? The question is that the motion be amended as follows. Be it therefore resolved that government considers continuing to meet with the local banking and money lending institutions to discuss reducing interest rates immediately and not increasing interest rates for the next 24 months, and by amending the second resolve section to read, and be it further resolved that government considers amending legislation to establish an interest rate setting body and other relevant banking reform measures. All those in favor, please say aye.
Aye.
Those against, no. The ayes have it. The amendment to private members' motion number 16 of 2022-2023 is duly passed. The amended motion is now open for debate. Does the mover of the motion wish to exercise his right of reply?
Are debating the closure of the full debate, or you think you want to give members a chance to go back? I think members have already said their piece, but if they want to,
I've given members an opportunity to rise, and none of them have further. So please proceed, Honourable Member for West Bay West.
I was rather happy to have two members second. And I really don't think that they are prohibited by standing orders, because As our standing orders go, they're very vague. It says, as long as it's seconded. Anyway, Madam Speaker, I want to thank the member for Bordentown West, who is the seconder of the motion and whom I discussed it with in the first place, and the member for West Bay South and Minister of Financial Services. And I do thank all members who are in support to think outside the box, particularly those who have voiced their feelings. I want to thank the Leader of the Opposition, who spoke on behalf of the opposition, and he was kind of vague, Madam Speaker, but I believe he was saying that they are in support and will vote for the motion, because saying he supports the spirit of the motion, I take it means that supporting the spirit of the motion, they're going to vote. And I want to thank all members who, Madam Speaker, have indicated over the last couple of days that they are in support, and they was hoping that they would get in the government the support so that there would not be any feelings of, or otherwise, for anyone opposite of what is being said. Madam Speaker, the Premier spoke, and I agree with some of the thought processes he had said. I don't agree with the full context of all that he said. The Premier has basically said that he is worried about changing the status quo. But of course, the Leader of the Opposition more or less said the same thing. So, Madam Speaker, we have to think outside the box. And the Premier gave a number of things and could point to a number of things that he's trying to do to help alleviate the situation parents find themselves in. And I want to say that while we all support the school luncheons program, paying the school luncheon bill is only a small bit of what the cost of living is to the parent in the cost of living. It's only a small bit. Now it helps, of course, and the government is doing a very laudable thing, and I always thank the minister who started the program, the current minister, who was then minister also of education, the member for Cayman East. Madam Speaker, while we can think about ways and means of alleviating the cost of living, people have to understand air conditioning is not cheap. And there, you lose air out of your house. Keep your doors open, windows got a crack in it, all these sorts of things. Keeping on the lights unnecessarily. That's bad for me because I don't like to sleep in dark. I don't like darkness. But yes, we need to fix what the problem is in a more satisfactory and long-term cure. But it will mean they can paint it any way they want and shift it any way they want, changing the status quo to where our people are better off. Not destroying anyone or any entity, except to put in place systems that will break the barriers. Madam Speaker, I've been through all sorts of scenes being in government for this long. I remember when we tried to get people upscaled and introduced programs to break the glass ceiling in this country. People forget it. People forget what I went through as Minister of Labor. And before that, just to get a motion passed, the licks I took from the people who was on these front benches, and I sat over there for 8 years to get the labor law changed from the masters and servants law, the slave law, the truck law. That's what it was called. Just to get that, to get people better positions and get women in better positions and get them to where they didn't go back to work a week or 2 weeks after they had a child. You know what it took? You know the licks and the insults? Sometimes walking out that door so filled up, your heart would bust. No, you all don't know. None of you were here. But some of you watched. Some of you watched. I am still not forgiven. Still not forgiven. You have to think out of the box. And if you're going to help our people, we have to take the hard actions. Have to take the hard decisions. So, breaking the barriers does not mean destroying the country. It's putting our people in better positions. And I want to get to this point quickly about the interest rates of 1979, 1980, 1981, 1982. Madam Speaker, if there was no change in those years, it was because the powers that existed took the same attitude that I'm hearing coming from the leader of the opposition and from our premier in certain positions that they took. We can't mess with things to change the regime of operations in the country. That's what they said on this front bench, all of them who were probably shareholders in the banks. Let's face it. Let's face the truth. You know the cussing that people took, that took an opposite position? No, you all don't know. We never had it covered. And they would dare not say it on the radio. They would shut off their mics and they would put a cussing on you. Madam Speaker, I think 1979, 80, 81, up to 82, right? Interest rates went way off the wall. That's correct. And they did change the currency regime, control of a currency in 83. But back then, people didn't pay. People didn't pay pensions or health insurance. And the cost of living was not the way it is now. And salaries back then was coping. Gratuities, my mother and the rest of them could add on rooms on their homes without going to the bank because they were getting their gratuities. And then too, they didn't have all the planning regulations to come down on you to tell you can't do something, can't do that, and do the next thing. And Caymanians back then went out and helped each other too. We gotten away from all of that. Yeah. So things were different 1980 and onwards, 79 and onwards. People got something. People built homes without getting huge loans. Take it up to the belt and people help them. So why are we so afraid today? Yes, the whole world, as I said yesterday, internationalism has taken over and changes, and the vagaries of internationally affects us. But that doesn't say that we should lie down and die. They were doing things to better their families. Interest rates were high. As I think the premier was the first one that came up with the history of the high interest rates. Back then, you can't change it. The front bench was full with people who had the shares, the powers that be. I didn't bother. I got an argument with them. Yes, I did. Some of them Yeah. When boss went plant swampland, they filled it up too. And their offspring's better off for it today, while they're accusing people and trying to stop people from developing their land. Yes. Could sell all of it to Dart. That was okay, as long as they got their money. I have a history and knowledge which they cannot take away. Can't. My book is written. Just wait until I last day out of this house so I can say a lot about it now. So, Madam Speaker, let's not try to compare 1979 state of affairs and conditions of a huge amount of people then with the hopelessness that our people are beginning to be worried about now. Times have changed, and people are worried, and we need to do something about it. Now, I thought, and if the Premier didn't say that, he can correct me, but I thought they said they didn't want to get SEMA involved, didn't want to spend to get SEMA involved. Something to that effect. So, Madam Speaker, tell me this. SEMA can do something to help our people. But they're saying they can't. They don't want to spend. But yet, Madam Speaker, they can come down here and agree to spend $4 or $5 million on consultants to say where a road can't go, even when certain parts are of no harm to the natural environment. I can't agree with that. Don't tell me you can't spend. Stop spending where you shouldn't spend. So if they can't see the possibility of them not accepting 24 months, have you asked for 1 year? I know you had that discussion, but did you ask for 1 year? No, and I didn't ask for 1 year. I also hear in this debate that we must be careful in giving permission to CIDB to take deposits because we would be creating liability. I think that was the argument of the Honorable Leader of the Opposition. But yet, Madam Speaker, they are prepared, they are satisfied to get more and more money from central government to put into CIDB to lend. More money from central government? When central government, and where will they get it from? When central government has difficulty to fund its budget and get enough revenue to do all that members of this House wants done? Where's the liability in that? There's no liability? Oh, the government can just come up and let's put another 5 million, 10 million. Just so? I don't believe so, Mr. Leader of the Opposition. No, Madam Speaker, our people's pension money is sent overseas. At times, millions, I understand, has been lost in bad investment. If we need to upscale our staff, the law gives the protection. So put in more banking professionals to manage the funds. Look at our credit union, Madam Speaker. Is that not well managed? I think it is. And there's a lot of good to the people of this country. Our development bank languishing. I don't know if they're making a profit. I don't know. I haven't heard. We have that institution, and we have a law, relevant, packed full of safeguards, and yet they're talking about liability. Yes, there will be a liability if we take deposits from whomever we take them from. But can we say, honestly, in our heart of hearts, that we can't find the professional individuals to manage it? More professional individuals, I should say, to manage it? Must government say that they can't get the professionals to manage? Must we continue to see our people's money sent to who knows in what entity to lose, sent overseas? No. We are giving them good recompense for losing. I don't agree with these status quo positions. No. No. So now we understand they didn't meet with individual banks. I think the Premier said that. I think the Minister of Financial Services said that. They met with the board. And it's the board that tell them, because I guess they think that the board speaks for everybody. You talk to some people, they say, we don't know nothing about it. Now, who's telling the truth? They met with the board. Madam Speaker, when I was an insurance salesman with Mr. Howard Stevenson, who I rate as one who did tangible strides to help people in these islands. And as a salesman, I tried to get managers of companies to buy for their staff, and they formed excuses over excuses and wouldn't budge. Can't do that. You think I took that as a pushover and said I'm not going to try to help those people who I know needed help, and I was a salesman, I needed the commission? I didn't stop there. I went to staff individually and talked to them. Hey bro, you need to be insured for security for you, your wife, and your children. And I didn't win all, but some bought the insurance, and I knew families, children that benefited. I don't think we can rely and back off because they say no. I don't believe that. I never did. And I'd like to say I think I was a successful insurance person. Yes. So, Madam Speaker, they are also saying because it is complex, the way the system is set up, which system is to ensure that the banks charge what they want when they want to increase. But that is what is the problem. A high interest rate can and will destroy people's ability to pay for their house. And if they can muster the money to pay the bank, if they can muster the money to pay the bank, listen, if they can pay the money to get the money to pay the bank, they can't pay CUC and buy food. That's the reality of it. That's it. So there is no question about how our banking system has evolved, Madam Speaker. And I know as good as the Premier or the Leader of the Opposition. But I believe it can be tweaked so that our people are better protected and the banks still are protected too. Nobody has to run nowhere. And are they going to run? I think at least one that I know, one of them, they're large profits when you check it. Go and Google it. And so who got the profits and where did they get it? Right here. Right here. Right here. Are we cussing them for that? No. We do everything as legislators to improve our laws, to protect them, and in fact, even put us at a disadvantage. I'll come to a little bit about that. Protecting them, because KYC is a horrific, horrific animal. So, Madam Speaker, I don't want anybody as I used to say, put credit in one of my pockets and then take it out of the next. I have done more than either one or two of them to protect this country. Took the licks for it. I'm not here about scaring away banks and systems that are good for us. No. No, Madam Speaker. And I heard the leader of the opposition expound in his way over and over about being tied to the US dollar. But from what I'm told, the Cayman Island dollar is a significant revenue source for the banks here because of the 2 to 4% spread from the CI dollar to the US dollar and vice versa. I don't want to destroy them, but let us make sure that in all this money, that our people are protected. Can't repeat it enough. So we know, and we are not saying that we don't want them to do that to make money, but we have to get an agreement so that our people are protected. So no one needs to, as I said, put credit in one pocket and take it out of the next. I'm here to protect business. And that means protecting all of our people. All of our people. And I have always done that. Protect, enhance, and promote business here in these islands. And that's what I have done. Go overseas, sit at the table, and when I said you have to travel and be at the table for when Cayman name is called, you're spending too much government money. That's what I was told. You're not doing nothing. You're not going to call to do that. I hope we all remember all those things that we complained about, and now we have to do. That you complained about me, you even got me voted out of office for some of it, because you could sell it good. Remember it and bear it in mind. And I heard the former Premier, Sir Alden, the member for Red Bay, stand there and said, when I was appointed Speaker, that perhaps there were too many things that we ought not to have done against each other. He's absolutely right. But we're both old enough and long enough in the tooth in this house to understand that. I don't have to bow to anyone, be scared of anyone about where my position is, where I stand as a Caymanian, where I stand as a person who likes to see inclusiveness in the country with whomever comes here. And if they come here, then we work with them. And if they are doing the right things and living by the law, then they are part of us. I'm not one of them that getting out there and saying otherwise. No. And I'll say this too, Madam Speaker, while it comes to mind. They said about what happened in 2001. I took over the situation in 2001. Everybody needs, I don't need to go through that, because it brings up too many bad memories. But don't anybody in this house start it, because there's records. We faced a world, especially in the United States, but all over. You remember this? Remember how well we did? We brought in business. That was my job to do. And the more business we brought in, the more revenue we got, and the stronger the government was. Yes, there was unemployment. There was. Even till that started to go down, it started to go down. People started to invest again. So, let us remember all those things. Don't, as I said, I remember what I went through with the Foreign Office, because I wouldn't agree with them. They investigated me, made sure they had people to back them up too. For what? Using the credit card when everybody else was using it? Don't forget. So I take umbrage when they come, saying the nice things on one hand, but on the other hand, they're writing a different story. No. Madam Speaker, I think we all know what we need to do. And the amended motion says it. But, Madam Speaker, in closing, let me say, yes, I know I don't want to be reminded of our sins. But the banking sector, in relation to Caymanians opening accounts, banking fees, and their policies which touch and concern the consumers who are our people and bank customers otherwise, these are serious things that are happening right now. And it has been a problematic and a sore issue which many have expressed concerns about. Various jurisdictions brought this issue on their national agenda, including CARICOM, heads of state and government, as well as senior North American banking executives. And I think the Premier was in attendance at that meeting at CARICOM. And I am also minded that the Minister of Financial Services attended various meetings and mentioned the technological advancements and provided updates on several pieces of legislation tailored for the global financial services industry. Madam Speaker, the situation though, and we understand that they have costs to recover, even though, for example, the ATM is a replacement of an actual teller from in the bank, which save costs on the banks. Their ATM installations primary service to enhance the product service delivery and a measure of the efficiency and to guarantee consumer satisfaction. Yet the consumers are charged fees to utilize the ATMs. And so perhaps the banks could also at this time consider the multiplicity of functionalities of the ATMs as in other jurisdictions. The check is another bone of contention. This includes, but not limited to, depositing checks and the time involved for processing, the difficulties in charging or changing a check which is drawn on a bank of which you aren't a member, even specifically in instances with a government-issued check. You take the government check to the bank the government uses, but that bank won't take it if you don't have an account with you. There needs to be a discussion on the issue, as it has wider implications on the society at large and cause unbelievable inconvenience to people. The fees in question may be nominal, sometimes inconsequential, and significant, or seems insignificant to the wealthy. Maybe, but I am here the wealthy. I hear the leader of the opposition saying that he's getting hit hard with fees. But it has, as I said, material effect and impact on the average person in our society. These are things that must be looked at. They must be looked at, Madam Speaker, and I'm hoping that in any discussion ongoing, the government will take those things into consideration. Madam Speaker, I think I have thanked members who participated and made points here, and those who did not but had others speak on their behalf. And so I'm hoping that members can now support the motion, and I hope, Madam Speaker, that it is taken seriously. I say this again. The will of this House has to be carried. We can consider, because that's the standing order. But the will of this House cannot be trampled by any committee or otherwise. So I hope members in voting, and I hope that you all support our motion. I hope in voting the government understands they now have to act and think more outside the box, because as the seconder of the motion said, the banks are just not going to do it themselves. Thank you very much, Madam Speaker, and thank you, honorable members.
The question is, be it therefore resolved that government considers continuing to meet with the local banking and money lending institutions to discuss reducing interest rates immediately and not increasing interest rates for the next 24 months. And be it further resolved that government considers amending legislation to establish an interest rate setting body and other relevant banking reform measures. All those in favor, please say aye.
Aye.
Those against, no. The ayes have it.
Madam Speaker, can I have a division? Yeah. I got a division. I won't catch this thing, man. You want to lead up opposition. That's coming useful to you in these days. One of these days you say, what the hell are you going to say?
Honorable Wayne Panton.
Aye.
Honorable Juliana O'Connor Connolly.
Aye.
Honorable Kenneth Bryan, absent. Honorable Sabrina Turner.
Aye.
Honorable Johanny Ebanks, absent. Honorable Andre Ebanks.
Aye.
Honorable Bernie Bush.
Aye.
Miss Heather Bodden.
Aye.
Honorable Dwayne Seymour.
Aye.
Honorable Isaac Rankin.
Aye.
Honorable Makiva Bush. Aye. Honorable Roy McTaggart.
Aye.
Mr. Joseph Hugh.
Aye.
Mr. Moses Kirkconnell.
Aye.
Miss Barbara Connolly.
Aye.
Honorable Sir Alden McLaughlin.
Aye.
Mr. David White.
Aye.
Mr. Christopher Saunders.
Aye.
The results of the division is as follows: 16 ayes and 2 absentees. The ayes have it. Private members' motion number 16 of 2022-2023 is duly passed as amended. Now call on the Premier to move the motion to adjourn.
Madam Speaker, thank you very much. Madam Speaker, we will come back tomorrow and complete government business and the rest of the private members' motions. We've had a long evening, and I think, Madam Speaker, members are tired after having a long evening yesterday as well. So, Madam Speaker, I want to thank all members for their contributions today, and We will complete the business of the House tomorrow, and I therefore move the adjournment of this Honourable House until 10 a.m. tomorrow morning.
The question is that this Honourable House do now adjourn until 10 a.m. tomorrow morning. All those in favour, please say aye.
Aye.
Those against, no. The ayes have it. This Honourable House is now adjourned until tomorrow morning at 10 a.m.